Well, hello and welcome to Market at Midday, streaming to you live with our feet firmly on solid ground from Spotee Connect, where we answer your questions. Let's bring in today's chief spotter. Might as well get straight into it. Helping us navigate the earthquake stage of Armageddon, today we have Justine Pollard from Smart Trading. G'day, Justine. How you going?
G'day, I'm going well, thanks.
Excellent,
I
excellent.
heard that was a lot of action down there in Melbourne. That's a bit...
Yeah, I know. I mean, my first initial worry was, I know what's it going to do to the internet connection and all the like. But of course, we're able to survive it fine, which is great. I mean, if I was allowed to go beyond 10 kilometres, I'd go down to town and pat all those construction workers that are currently protesting on the back for a job well done for ensuring that my house doesn't fall down. So well done, lads. Try to stay out of trouble. But look, Justine, we're not going to get into geopolitical tirades or the like here at the moment. At Spotee, we're all about shares, of course, and you too are all about shares at Smart Trading. Why don't you tell us a little bit about your trading background and the great business that you've built there at Smart Trading, particularly the education side, because I know so many people are always on the lookout for that.
Yes, I mean, I'm very big on having a trading plan and a strategy for the market. When you start out, it's all about finding the right share and buying the right share. And once you sort of buy into some shares, all of a sudden you realise you've got no strategy. What am I going to do next? How do I exit? How do I manage this? So that's how my book, Smart Trading Plans, was born. Wiley asked me to write a book. I was already running courses at evening colleges and with groups of people on how to write a trading plan for the stock market and a big focus on exits and money management. And Wiley asked me in 2007 to publish a book about trading plans. So that was published in 2008 and still sells now today quite frequently. And it's all about helping people write a trading plan for the stock market and considering everything that can happen and making sure you have a strategy around how you're going to handle those situations. And then I've got some courses that help support that. I'm a pure chartist. I love my charts. I use Metastock. I view everything on Metastock. That's why it's good to team up with you, because you look more at the fundamental side of things, where I'm a pure chartist. I'll look at a chart and I can say the health of a share based on the chart, just like a doctor can look at our bloods and tell us our health. I can just open up a chart and see what the share's doing and know whether it's a healthy share or an unhealthy share and whether I'd want to be a buyer or not. So I provide that education on how to read charts and how to find healthy shares and knowing the signs when things are becoming unhealthy and when to get out of it, and wrapping that around into a trading strategy to what suits. I mean, I'm a long-term and a medium swing trader, but it can all be adapted to intraday trading, and it's about trading that suits your lifestyle, not being an extra stress on your life.
Well, I don't know which share market you look at, but it keeps me hot by 24/7, Justine. But I tell you what, I do envy those of you who are able to make it fit into your life nice and easy. And at smarttrading.com.au, you saw me navigate that website just then. Go and have a look at what Justine has on offer. And if you are interested in wanting to learn more about the fine art, I won't call it dark art anymore, of technical analysis, then by all means, please do seriously consider that. So thank you very much for that, Justine. All right, let's currently go into the market, which is having a bit of a renaissance this morning. Currently up around 0.5%. It's a relatively quiet day compared to yesterday in terms of company news. But the big news story at the moment is that Evergrande seems to have reached a deal with bondholders who don't mind apparently waiting a lifetime to get their money back. Fair enough too, given the multi-billions of dollars we're talking about. Now, obviously the market sees this as some sign that we're going to be delaying fears of contagion for the moment there in China. Others might argue that it's simply kicking the can down the road. Time will tell, but obviously the earthquake down here in Melbourne was almost as loud as what it would have sounded like when they were blowing up all those buildings in China just recently when Evergrande really hit the skids. But Justine, we've got you here to talk stocks predominantly, and the first one I want to talk about is a company that's had some news today, and it's Zip code Z1P actually. Now look, they've come out and said that they're investing into India. Zest Money is the company that they're buying a part ownership in for some US $50 million. They're a buy now, pay later provider. They're in the subcontinent. Currently, they have over 11 million registered users, which is peanuts relative to the size of the population at the moment and their propensity to take up technology. They have something like 10,000 online merchants, 75,000 physical stores. The ownership that they're buying are what they know as known as C preference shares, which are basically in the world of off-listed startup tech companies. They've got A, B, C class shares, and then you got either founder related or then you got these which are preference. So either way, long story short, they've got an actual beneficial interest now in this little company. But Justine, I do want to ask about the price because it's actually one of the more frequently traded stocks amongst retail traders. Right or wrong, it's just the way it rolls. Its price has looked a little sick in recent times, notwithstanding the acquisition of Afterpay, and you would think the legitimacy somewhat of the broader sector. But the price reaction, though, it's frustrating for those that are believers in the story because it's sort of been tracking sideways for a while now. What's your thought on the current chart?
Yeah, it's been really going nowhere. I mean, the buy now, pay later market it was amazing last year and also earlier this year again as well. I mean, Zip had a huge run earlier this year and it's a bit like zigzagging around. Zips up, zips down. So but it has been very flat and actually broke to new lows yesterday. So collapsed through a support line yesterday. So this news has pushed it back up into its trading range, which is a good sign for it. I'd have to see how it's going to look at the end of the day and if there's volume support with what's going on. But from a charting perspective, with the break of support yesterday, it was looking quite unhealthy. So it's going to be interesting to see how it looks at the end of today, because I tend to look at things at the end of the day to see, well, how by the end of the trading day, how did the buyers and sellers feel about this share? Did they keep it up there? Did they keep it near its highs, or has profit taking come back into it by the end of the day and pushed it back down near its lows? So right now, because it had that blow yesterday, it's not looking so healthy. I'd have to wait and see what continues to pan out today, how the volume's looking and how that's looking, because from a charting perspective, it's not probably looking that great, but anything can change very quickly.
It can, although that said, though, you've highlighted a great point with regards to those new lows, because obviously, as I alluded to at the start there, it has a large retail investor base, and obviously looking at charts is all about psychology and managing that, and the last thing you want to do is be in a stock where everyone that's bought it in the last 1 or 2 years is losing money, because inevitably what kicks in is frustration, and that can unfortunately lead to those scenarios that Justine was talking about, and hence why she'll be waiting here. But it is a bit of a last chance saloon, I dare suggest, at the moment, Justine. But I do want to move on to IMUGENE. IMU is their code. If you do want to see a stock that can zig and zag, this one does it in nice big movements, like the Titanic as it were, but it's on the right side of it at the moment. She's definitely above water. They continue to push forward with their latest patent now being Japan, whereby their gastric cancer solution is now currently up there for review. But the price chart looks interesting to me because some may have suggested that a double top was forming, Justine. Now, be very interested to know how you're reading that current price action at the moment. Given the current state of play, they've got good news flow, but obviously they've come up and just sort of tipped over that little second peak there. What sort of levels would you be watching from here on in?
Yeah, it's definitely making equal highs right now. I mean, today it's at perfect equal highs. So it is definitely got that double top pattern. It's quite a wide double top. I mean, just looking at the weekly chart, its lows were 28 cents up to its, it's around the 48 cent mark now. Never really tipped over 50 cents as yet. So right now, because it's, touching near its highs and it's had quite a strong run, it may have a pullback, I don't know, but it's definitely making equal highs. So it'd be interesting to watch and wait on this one to see whether it can, it it's not going to pull back now because it did resist that price point last time. But it is quite a wide channel, so as well, there's quite a wide trading range in that double top.
Yeah, but I mean, I suppose the question then becomes, because investors get nervous buying stocks at all-time highs, Justine. So again, another bit of education here for everyone. What sort of sage advice would you give an investor who sees a stock trading at an all-time high, and you know, our inevitable sort of you know, demeanour as Australians is that, oh well, it'll probably likely go down now. But from the world of TA, what does all-time highs mean to you?
And that's the thing, it doesn't mean it's going to go down. I mean, you look back at this chart, you know, back in April, and it went from 10 cents up to nearly 50 cents, no stopping it. And I don't know if it could blast through 50 cents, and that's going to be a really healthy sign for it. So if people decide they want to get in because they've done their homework on it and they feel good about it, go in. You could always consider going with a small position with a wide stop loss, and then build on it and add to it if it continues to prove itself to you. So if you're not sure and you're not confident, or you've done your homework and you definitely want to get in there, but because it's at that all-time highs, you're a little bit worried about it, you could always go in with a smaller position and build on it. Because I have seen, you know, some shares where they just haven't stopped. There's been nothing stop it. I mean, go back to Kogan and Afterpay last year, there was no pullback in them.
No.
But then you have a lot that do pull back after they have had a strong run. So that's why we can sometimes tend to wait and see, because that does happen a lot of the time, but sometimes it doesn't. So I wish there was a magic number for everything, but unfortunately there's not. So you can always go in, smaller.
The concept of averaging up, that's a whole topic for another day, because that can also send people batty too. But I do want to, for those who like to back the jockey, well, we've got a new one today. The company's name is Genesis Minerals, code GMD. The great RALEIGH FINLAYSON, kingmaker at Saracen Minerals, will be tipping in some 7 million of his own coin into the business. Northern Star's going to be buying 3 million. And Alkane Resources, who had a deal with GDM initially to provide technical and financial support, well, that's been gazumped now, but they'll be subscribing to any shortfall from the investment. Not only that, just to also drop some more names, Neville Power of FMG fame is also involved in this. Now, Justine, I don't want you to talk about so much targets or the like with GMD, but the event itself has seen the price pop. It's risen over 100%. On the back of that, it is a little bit off its high. So I just want to talk about that, you know, the whole risk of a pop and drop, buying after an event like this. You know, what sort of, when these events happen, and they can happen, and unfortunately in the case of some, they were in a downtrend before they happened. So not many of us, unless you're a true believer, were actually holding them at the time. But when traders see this sort of action, what sage words of advice could you provide them in regards to, you know, helping them manage the risk side of it? Because of course, anyone that bought at 21 cents, when I last looked, was at something like 16 cents, which means they've just lost 25% on a trade that lasted them literally a little over an hour. So what's your view in regards to buying these sort of neck break moves, Justine?
I mean, I don't tend to jump into huge volatility moves because they can jump one way or another very quickly. That, you know, that they can change hugely. So it's you know, if somebody does want to sort of play around with it, it's a bit like what I was just talking about before. Just play with a small amount, and you can always build on it. But it has, I mean, it's what, over 130% rise today, but it's moved back down near its lows now. So you can see there's profit taking that's come off. If you're looking at it sort of on its intraday activity, you know, it's moved, you know, it's had that spike and now it's moved down. So definitely profit taking coming out, and it is hard when there is that volatility, and there's a lot going on with this stock right now. So there is liquidity in it and volume in it today, that's for sure. But, you know, if you're sort of that long to medium term holder, it depends what type of trader you are as to what strategy you're going to use. You know, if a longer term trader, they want to get in there, they'll have that wider stop loss. They can withstand the pullbacks that happen. Someone that's sort of medium to short term can't, because they tend to go in with that tighter stop loss. So it all comes down to the strategy of what you're trading. So there's sort of, I can't say what every type of trader should do because it depends on that strategy. But when there is such a large volatility move, it's going to be interesting to see how it looks at the end of the day, whether the profit takings really come in, and it could end up, closing down at new lows. It could end up closing at brand new highs. I don't know.
Yeah.
Because I'm not an intraday trader. I've been there. I've done that. It's very heartbeat experience trading intraday. And yeah, you'd have to know your game in that regard and use very, very tight stops. But the liquidity wouldn't be in a share like this for me to be doing intraday trading.
Yeah, fair enough.
Yeah.
Yeah, that makes perfect sense. I mean, from my perspective, I've already, I suppose, declared my man crush on RALEIGH. So notwithstanding today's action, which I'll let the price settle down, I think this is a pretty serious bunch of heavy hitters that have got together. And I dare suggest they haven't just done that because COVID rules have been released a little bit. I think there's something that's worth watching. So possibly a little period of consolidation, wait for some of that froth and bubble to come out of price, and who knows, they might eventually find me on the register. Once I do my own research, of course, to make sure you do the same.
I love the psychology. Too. I love the psychology of these moves, and then looking at them later and seeing how they played out. And that's what I say to people, go and study charts, look at them and see how those moves played out, and come up with a decision, well, how would I play this sort of move out? What's happened in the past? And that's how you develop your strategies around that rather than on the fly.
Yeah, no, look, whilst past performance is no indicator of future performance, it's a bloody good teacher, and that's why, going back and really studying charts, if you are looking to be a technical analyst, is so important so that you can know the style that suits you and how it works and whether it fits in with your own personal risk objectives, of course, and what you're trying to achieve. Okay, and if you've got any questions about any of the topics or stocks we discussed, remember, you just jump in the Spotee Connect app and you can ask us there, which is actually a good lead-in, of course, because we're about to respond to your questions, which means we're about to bid farewell to our social media viewers. So remember, spotee.com.au if you want to learn more about our services and also hear our member questions answered by our chief spotter, as well as listen to their 2 stocks to watch at the end of the program. Thanks for tuning in.